So I do think a lot of the crypto market's a bubble. And it's funny because, so Bitcoin, for example, had very good performance for the past couple of years. But if you look at what happened in the broader crypto space, it was like way more. You had these tiny projects go up dramatically. You had meme coins, like literally coins that are made as a joke that become worth more than large banks in terms of market capitalization, like Dogecoin or even some of the others. And so I do think there's a lot of froth in that area. I don't really view a lot of froth in Bitcoin right now. It's going to have a volatile period for a while. But I do think that when you look out into the broader space, there's a lot of bubble-like attributes. A lot of funds, a lot of VCs have raised, billions of dollars to market their products. And a big thing is we don't even have regulatory clarity yet. A lot of those. So, for example, we know that Bitcoin is not considered a security. Basically doesn't pass what's called the Howey test, meaning that it didn't raise capital to have people go and then pursue a project and try to, increase the value of that capital, right? So Bitcoin is classified as a property or commodity, and probably some of the hard forks are likewise. But a lot of the smart contract platforms are essentially securities. They basically look like equities in the sense that the teams raised capital and then went out and tried to make that project more valuable. But they didn't register themselves as securities. They didn't follow securities laws. We already had some entities get sued over that. And basically we have a lot of exchanges that the chairman of the SEC has said that most of them that because there's so many securities out there, a lot of them are carrying unregistered securities. And so I think basically we have to be prepared for the possibility of regulatory crackdowns in 2022, 2023. And that could really dent a lot of the crypto space, especially if it's already kind of let's say it did top out or will top out next year. Whenever it tops out, if it kind of eventually just kind of exhausts itself for this particular cycle, if you then lay a regulatory crackdown on top of that, that could get pretty brutal for that market. That could potentially give gold a bid. It could even give Bitcoin a bid to some extent, because that's the crypto that's kind of immune to those sort of at least around the margins, kind of because it doesn't have that specific issue of being a security. And so I do think that there is a lot of risk in that space. And these things can reverse quickly. Like we saw, for example, a lot of these unprofitable tech stocks had a really good year in 2021. Some of them had a really good year in 2020. Some of them kind of got into 2021 also doing well, but they've rolled over very, very sharply. Some of them might even be oversold at this point. I mean, some of them are probably decent companies, and just the whole sector has been absolutely crushed because, volatility feeds on itself. And I think you could see a similar thing in a lot of these cryptos. A lot of them are already way off their highs. Some of the meme coins, for example, are already way off their highs. And I do think that basically there's a lot of risk for that space. And so one of the favors to gold would be that if that space does have trouble, and you're in a negative real yield environment, it's possible some capital could flow back into gold.
And you're thinking, though, that Bitcoin itself is more stable than these other cryptocurrencies?
Well, in a technical sense, yes. One is it's more decentralized than the others. And so it's basically the other ones have kind of discretionary monetary policies where a central group of developers can change the monetary policy. Whereas Bitcoin, because of the path dependence to the way it came into being, plus the way it's designed, it has the most security and the most decentralization. And then it has the added benefit that Satoshi never marketed as he never said, hey, get this thing, get rich. He never raised capital. So he basically across the board, it's unanimous that Bitcoin, whatever governments may think of it, obviously China, for example, is not thrilled with it. Some countries may ban it, but it's not a security. That's the point. It's a kind of a distinction. They could go after it for other reasons, but it's not a security, and it doesn't rely on these centralized hubs. And so I think basically if you were to see a broad crackdown in the crypto space, Bitcoin probably would take a hit. But if there's one I'd be in, it would be that one, because it wouldn't be necessarily facing the same kind of the unregistered security problem that a lot of those other ones have. And so it's possible that in that ecosystem, you could have some capital flow back to Bitcoin. I think it's too early to tell because we have to see what happens with Gary Gensler and the SEC in the coming 2 years. But I would be very cautious if I owned a lot of these other projects or was just really overweight that whole space. The advantage of the Bitcoin space is that because it's kind of a public ledger, you can go back and do analysis and see what kind of entities are selling, right? So you can't necessarily see who's selling, but you can see, for example, if coins are sold, how long were they held on chain before they sold? So, for example, are people that bought 2 years ago selling, or people that bought 6 days ago selling? And so what we've seen recently is that a lot of the selling pressure is short-term people, and a lot of them are now below their cost basis. So generally a sign you see that in bear markets for Bitcoin, people are willing to sell at a loss and then keep selling. That's kind of what defines a bear market. They just want to get out of the position. Whereas in a bull market, you often see corrections go down. So they kind of get to their cost basis, and then they kind of refuse to sell below their cost basis because they still want to stay in the trade. And they're like, well, I'm not going to sell anymore. And so right now we're kind of on that line. So I think right now it's too early to say. We have to kind of see what happens in the weeks ahead. I think it could certainly consolidate in this big choppy sideways patterns for a while. I think it's going to partially depend on what happens with the Fed. I think now that it's $1 trillion asset class, more or less, right? It was a little over $1 trillion. Now I think it's a little bit under $1 trillion after this correction, but it's about $1 trillion. And that brings it up to the macro level where, before Bitcoin was obviously tied to liquidity, but it was mostly its own thing. Whereas now it's big enough that, the macro forces can influence it. Wall Street's involved. And so they could sell it. And so my overall kind of forecast is for volatility, and I don't really have a clear kind of near-term 6-month forecast until I see more data. So really, I'm kind of watching multiple asset classes rather than, say, focusing heavily on that one.
Where do you see the stock market right now?
So we clearly took out a lot of froth in some of the names. I think that there are a lot of value stocks that are pretty attractive. Healthcare, for example, was sold off because of impending regulation that looks like it won't be as severe as some thought. And that's caught a little bit of a bid in this recent weakness because, they have risks, but really the economic cycle is not really one of them as far as healthcare sector is concerned. So that place looks attractive. And in general, I mean, even some of these former bubble stocks that are down 60, 70% from their highs, there's a certain price where even some of those start to become attractive. And so I do think that you could have a stabilization. Ironically, what we see in the past is that when the Fed tightens, it's actually pretty good for the stock market. And generally because they're only able to tighten when the economy is reasonable enough that they tighten and they're able to keep doing it. It's really when the Fed tries to tighten and then weakens and then they start going dovish. That's when you start to have kind of troubles. So I'm kind of watching a couple indicators to see what happens. I mean, if they make it clear that they're kind of out of touch in some way. So for example, in 2018, Powell said he's on autopilot with tightening, and the markets threw a fit. Right. So that was an example of for a while they were tightening and the market liked it, but then towards the end of it, when they seemed like they were just going to go full speed ahead, the market threw a tantrum. And so right now we're kind of in the early stage of tightening, where you're tightening from a negative base, right? You're tightening from zero rates and $120 billion a month in QE. And so tightening in their quote unquote tightening is only $90 billion a month in QE, and then only $60 billion a month in QE. And then maybe you get to the point where there's zero rates and no QE. And then we start talking about 25 basis point hikes, when inflation is 6%, right? So I think there's still potential little ways to go. We'll see how the market behaves. Overall, I would kind of focus on certain sectors over others. I think there's a lot of fear in the market, which I think makes the contrarians kind of bullish. But we also still see that, especially among the really big technology companies, valuations are still pretty high.